Did you know that most actively managed funds actually lose to the market? It's a surprising fact that many investors are unaware of. Despite the expertise and resources that fund managers have at their disposal, the majority of them fail to outperform the market over the long term. This means that the high fees you pay for their services often don't translate into better returns. That's right. They charge higher fees trying to beat the market but often fall short. These fees can eat into your returns significantly. Imagine paying a premium for a service that doesn't deliver the promised results. It's like buying a luxury car that constantly breaks down. The allure of potentially higher returns can be tempting, but the reality is often disappointing. Index funds, on the other hand, simply track the market, and they consistently outperform those fancy, expensive funds. By mirroring the performance of a market index, such as the S&P 500, index funds provide a more reliable and cost-effective way to invest. They don't try to outsmart the market, they just follow it. This straightforward approach leads to lower fees, and more often than not, better returns for investors. It's like trying to outrun a cheetah. Why bother when you can just ride it? The cheetah represents the market, swift and powerful. Instead of exhausting yourself trying to beat it, you can simply ride along and enjoy the journey. This analogy perfectly captures the essence of index fund investing. It's about harnessing the market's natural momentum rather than fighting against it. That's the beauty of index funds. They keep it simple and effective. There's no need for complex strategies or constant monitoring. You invest in a broad market index and let it do the work for you. This simplicity is not only appealing but also incredibly efficient. It allows you to focus on other important aspects of your life while your investments grow steadily over time. They're like the tortoise in the race, slow and steady, but they win in the long run. The story of the tortoise and the hare is a perfect metaphor for index fund investing. While actively managed funds may have short bursts of performance, they often falter over the long haul. Index funds, with their steady and consistent approach, tend to come out ahead in the end. It's a strategy that rewards patience and long-term thinking. So if you're looking for a way to grow your wealth without the headache of picking individual stocks, index funds are your answer. They offer a hassle-free, low-cost, and effective way to invest. By choosing index funds, you're opting for a proven strategy that has stood the test of time. It's a smart choice for anyone looking to build a secure financial future without the stress and uncertainty of active management. Whether you're a seasoned investor or just starting out, index funds provide a reliable path to financial growth and stability. Investing can seem intimidating, especially for beginners. The world of finance is filled with complex charts, confusing terms, and a seemingly endless array of options. It's no wonder that many people feel overwhelmed when they first start thinking about investing their hard-earned money. There's so much jargon, so many options, and the fear of losing money can be paralyzing. Terms like dividends, capital gains, and asset allocation can make your head spin. And then there's the constant worry about market volatility and the potential for financial loss, which can make even the most confident person hesitate. But here's the good news. Index fund investing is like the easy button for building wealth. Imagine having a simple, straightforward way to grow your money without needing to become a financial expert. That's exactly what index funds offer. They provide a hassle-free, low-maintenance approach to investing that can help you achieve your financial goals. It's a simple, low-cost, and effective way to invest in the stock market without needing a finance degree. Index funds are designed to mirror the performance of a specific market index, such as the S&P 500. This means you get to benefit from the overall growth of the market, without having to pick individual stocks or worry about market timing. With index funds, you don't need to spend hours researching individual stocks or trying to time the market. Instead, you can invest your money in a diversified portfolio that spreads your risk across many different companies. This diversification helps to reduce the impact of any single stock's poor performance on your overall investment. You simply invest your money in a fund that tracks a specific market index like the S&P 500 and let it grow over time. The beauty of this approach is its simplicity. You don't need to be constantly monitoring the market or making frequent trades. Instead, you can take a more hands-off approach, knowing that your investment is aligned with the broader market's performance. It's like having a team of experts working for you, but without the hefty fees. Index funds typically have much lower fees compared to actively managed funds, which means more of your money stays invested and working for you. Over time, these cost savings can add up significantly, boosting your overall returns. So, if you're looking for a straightforward, cost-effective way to invest, index funds might just be your easy button to financial success. Starting your investment journey can feel like stepping into a haunted house. Fear of the unknown, fear of making mistakes, fear of losing everything. These anxieties can hold you back from building a secure financial future. But remember, fear is a liar. One of the biggest challenges beginners face is procrastination. They get overwhelmed by the information overload and put off investing until later. But the best time to plant a tree was 20 years ago, and the second best time is today. Don't let fear keep you from taking that first step. Section 4. Decoding index funds. Simple and effective. Index funds are like a basket of stocks that represent a particular market index. For example, an S&P 500 index fund holds stocks of the 500 largest publicly traded companies in the US. When you invest in an index fund, you're essentially buying a tiny piece of all those companies. This diversification is one of the key benefits of index funds. By spreading your money across hundreds of companies, you reduce the risk of losing everything if one company performs poorly. It's like the old adage, don't put all your eggs in one basket. Section 5. Sarah's story, from doubter to millionaire. Meet Sarah, a dedicated schoolteacher who, like many others, dreamt of achieving financial freedom. However, she felt intimidated and overwhelmed by the complex world of investing. The jargon, the risks, and the sheer volume of information made her hesitant to take the first step. Despite her doubts, Sarah decided to start small. She began by investing $500 a month in a low-cost S&P 500 index fund. It wasn't a huge amount, but it was a start. She knew that every journey begins with a single step, and this was hers. Over the years, Sarah stayed consistent with her investments. Even when the market experienced dips and downturns, she remained steadfast. She trusted in the power of compound growth and the historical resilience of the market. She understood that market fluctuations were a natural part of the investment journey. Sarah didn't just invest her money, she invested in her knowledge. She read books on investing, attended financial seminars, and sought advice from trusted financial advisors. She learned about the importance of diversification, the benefits of long-term investing, and the dangers of trying to time the market. Fast forward 25 years, and Sarah's consistent investing, coupled with the magic of compound interest, turned her initial investment into over $1 million. Her disciplined approach and unwavering patience paid off in a big way. Today, Sarah enjoys the fruits of her labor. She has the financial freedom to travel, buy her dream home, and spend quality time with her family. Her journey from doubter to millionaire is an inspiring example of what can be achieved with determination and smart financial choices. Sarah's story is a testament to the fact that becoming a millionaire isn't about luck or timing the market. It's about discipline, patience, and making smart investment choices. Her journey shows that with the right mindset and a commitment to learning, anyone can achieve financial success. Now, Sarah is passionate about sharing her knowledge and experience with others. She mentors young investors, speaks at financial literacy events, and even wrote a book on investing. She wants to empower others to take control of their financial futures, just as she did. Sarah's transformation from a doubter to a millionaire is a powerful reminder that financial freedom is within reach for anyone willing to put in the effort. Her story encourages us all to take that first step, stay the course, and believe in the power of smart investing. Section 6. Index funds, your winning ticket to wealth. Index funds offer a plethora of advantages for both seasoned investors and beginners alike. Their low fees, built-in diversification, and historical outperformance make them a compelling choice for building long-term wealth. They're like the tortoise in the race, slow and steady, but they consistently reach the finish line ahead of the pack. Remember, investing isn't about getting rich quick. It's about building a secure financial future for yourself and your loved ones. And with index funds, you can do just that, without the stress and complexity of active trading. Section 7. Start your millionaire journey today. So, are you ready to embark on your journey to becoming a millionaire? Don't let fear or procrastination hold you back. Start small, stay consistent, and let the power of index fund investing work its magic. Remember, the best time to plant a tree was yesterday, but the second best time is today. Take that first step towards financial freedom. Research different index funds, choose a reputable brokerage account, and start investing regularly. Your future self will thank you.